Sometimes the entire story of a company, its ambition, its vision, and yeah, even its downfall, can be found wrapped up in a single word. Today, we're diving into the story of Railsr, a huge name in the embedded finance world, and we're going to see how its very identity is central to, well, everything. So, take a look at this logo. Seems pretty simple, right? But this was so much more than just a fresh coat of paint or a simple name change from their old name, Railsbank. This logo, and the name Railsr, it represents a massive seismic shift. It's a declaration of a whole new ambition, and honestly, it's the anchor for this entire story.
And that really makes you think, doesn't it? We usually just think of names and logos as branding, as marketing fluff. But what if, in this specific case, the change from Railsbank to Railsr tells us everything we need to know about the company's journey, from a focused little startup to a global contender, and all the crazy risks that come with that kind of ambition?
To really get what that little R is all about, we first have to understand the bank part of their old name. So let's rewind, let's go back to the beginning, to the foundation the company was built on when everyone knew them as Railsbank. Railsbank was born out of this incredibly powerful idea, banking as a service, or what we all call BaaS. Now, the concept is pretty simple, but it was absolutely revolutionary. The idea was, what if any company, not just a traditional bank, could offer financial services? BaaS provides the digital plumbing, all the APIs, to make that a reality. So the company kicks off in London back in 2016 with a super clear mission: be the best BaaS infrastructure provider on the planet. And man, did they grow fast. A huge moment for them was when they acquired parts of Wirecard Card Solutions. That move instantly gave them control over more than 50 different card programs. So Railsbank wasn't just some startup with a cool idea, they were a serious operational player right out of the gate.
But here's the thing, just being a bank in the background wasn't enough. The ambition started to swell way beyond that initial mission. And that led to this huge pivotal switch in their vision, their identity, and of course their name.
And this right here just lays it all out perfectly. In June 2022, Railsbank becomes Railsr. The focus completely shifted. It wasn't just about banking as a service anymore. Oh no, it was about this much, much bigger universe of embedded finance experiences. They didn't want to be the quiet bank in the background. They wanted to be the rails, the actual fundamental infrastructure for the entire financial internet. Dropping bank from the name, that was a massive statement. And what a statement it was. I mean, listen to this ambition. Their goal was nothing less than to own the financial layer of the internet. This wasn't just about providing some banking APIs anymore. This was about powering literally any financial interaction inside any app for any company anywhere on Earth. The scale of that ambition was just immense. Okay, so a gigantic vision, but how did it actually work? How did the whole thing run? Let's pop the hood and take a look at the engine they built to try and turn that dream into a reality. The way they structured this is actually pretty clever, and it's super important to understand. Railsr wasn't just one company, it was really split in two. First, you had PayerNet, which was a subsidiary that held all the complicated, regulated stuff, the e-money licenses, the access to Visa and MasterCard. These were the literal financial rails. And then you had Railsr, the tech platform that provided those slick, easy-to-use APIs that customers actually interacted with. And they made it so easy for customers to get on board. Their whole model was designed to just pull you in. You could learn about the platform for free, you could play around in a totally safe test environment, and then you could start building a real prototype with just a small subscription. The whole idea was to land any customer, no matter how small, and then grow with them as their idea took off and started to scale up. And behind the scenes, the tech they were using was seriously impressive. They built this powerful all-in-one package that brought together cutting-edge data tools, top-tier fraud prevention from partners, and, most importantly, all that access to major payment networks like Visa and MasterCard, which came through their regulated arm. Basically, they handled all the messy, complex stuff for their clients. So, the vision was huge, the tech was impressive, and the customers were definitely signing up. But then, with truly shocking speed, the train didn't just slow down, it came to a screeching, grinding halt. At its absolute peak, services that were built on Railsr's platform were being used by around 5 million people. Just think about that. This wasn't some tiny niche product, it was deeply woven into the financial lives of millions of end users. So what on earth went wrong? How does a company with that kind of reach end up in a full-blown crisis? Just look at this timeline. It is absolutely staggering. In June of 2022, they're on top of the world. They unveil the new Railsr name, the new logo, they're riding this massive wave of FinTech hype, and there's talk of a valuation approaching $1 billion. But here's the catch. That level of ambition, owning the internet's financial layer, it requires an astronomical amount of cash and perfect execution. And this all happened just as the global venture capital market was slamming on the brakes. So just 9 months. 9 months after that triumphant rebrand, by March 2023, the company is in administration, basically insolvent, and getting sold for parts.
The story doesn't completely end in a fiery collapse, though. A group of the existing investors, they got together, formed a new company called Embedded Finance Limited, and they acquired the company's assets. Now, this part's important. It was restructured as a going concern. That just means the core technology and the services would keep operating. It was a brutal, painful reckoning for the company for sure, but it was also kind of a validation that the rails they had built were just too valuable to let them disappear completely.
So after all that turbulence, what's the big takeaway here? What's the ultimate legacy of Railsr and its incredibly ambitious vision?
Well, to really understand the lesson, you just have to look at who their customers were. Yeah, okay, almost half were other fintechs, but look at the rest. Retailers, sports clubs, all sorts of brands you'd never ever associate with finance. This right here proves that the core idea that any brand can become a fintech brand is an incredibly powerful one.
And that's because what they were offering was just so compelling. They gave you a single integration to replace what could have been a dozen different vendors. They let brands keep their own customer experience front and center, no clunky third-party stuff. They offered this amazing Lego-like toolkit of financial products you could just piece together. And crucially, they handled all the boring, difficult stuff, the licensing, the compliance. They solved a huge, complex problem, which is exactly why building it was so expensive and so risky in the first place.
Which leaves us with this final thought to chew on. The name Railsr and that sleek logo, they represented this huge dream to build the foundational layer of a whole new financial internet. The company's rapid fall could easily be seen as a failure of that dream. But maybe it's something else. Is this story a massive warning sign for the entire industry? Or is it just the kind of chaotic, painful, but maybe necessary lesson that happens when you try to build something that's truly revolutionary?